Hi everyone, good morning and welcome to today's morning report chart analysis videos with me, Rich Market Analyst at Handset Markets on Thursday the 18th of May. We've got negativity through the markets again. These Wall Street markets sold off sharply yesterday. Big, strong decline on the dollar as well. But let's look at that. S&P 500 sharply lower. Look at that. VIX volatility. Wow. Massively higher on the VIX, and basically markets are increasingly scared or concerned about how Trump is going to be able to do anything really as a president, considering the chaotic nature of his sort of dealings at the moment, and equities have certainly reacted negatively on the back of that, as has the dollar. You can see that sharply lower. Interesting to see yields sharply lower as well yesterday. 10-year fell below 2.3%, the 2-year also falling away. Now, we had early doors today, a bit of a bounce on yields, which helped to support the dollar early on, but they're now sort of back towards the lows of the day again. The dollar's coming back under pressure again. It's just sort of the early gains that we've seen, or that we saw in a bit of a recovery for the dollar, has sort of been eked away again. Now, we have had news that former FBI Director Robert Mueller, who's sort of basically got cross-party support apparently, is seen as a fairly positive appointment as special counsel to investigate this the Russians' involvement in the election, and it's a positive move basically, and it should help to stabilise markets to a certain extent, and that seemed to be sort of happening early on. I think the key will come in the US session when we get US traders coming back in. I mean, futures look to be stabilising, so maybe there's an element of that today. Now, we've got a little bit of data out today, and the main factor is that we've had retail sales for the UK smashing estimates, really have smashed estimates on retail sales. Ex-fuel 4.5% up from sort of 2% expectation on the year, and that's helped to pull sharply higher on sterling, through 130 on cable, and a really strong move, and I'll talk you through the implications of that chart breakout in my analysis videos in a bit. But generally speaking, other than that, we've got the weekly jobs claims and the Philly Fed. Weekly jobs claims and Philly Fed. Weekly jobs claims 240. Philly Fed 19.5. Now, Philly Fed is interesting because we had on Friday. Sorry, that's a complete lie. We had the other day, I think it was it Tuesday, Monday, Tuesday, we had the New York Fed manufacturing, and it fell for the first time in 7 months. Now, will the Philly Fed also continue to sort of correct lower? Now, 19.5, yes, is a continued sort of unwinding of those early positive months of the year, earlier in the year, but yeah, I mean, if the New York Fed goes negative and the Philly Fed starts to fall away, the sort of expectation of positivity surrounding these sort of regional Fed surveys will come under pressure, and that could sort of impact growth going forward. So that will be a concern, I think, this afternoon. But until then, I think the markets are going to be reacting, and certainly at the moment, FTSE is sort of round out the lows of the day, so markets are still not sort of positive at all. Now, my chart today is the DAX, and we've had DAX as across the board pretty much on equity markets. We've had the DAX lower. It's broke below the initial support at 12,660 area. 12,660, and that sort of has sort of completed a bit of a top pattern, you could argue. I'll show you on the hourly chart where you do see that better. A little bit of a top pattern that sort of opens up. I suppose you'd measure from 840, 12,840 to 12,660. That sort of is what 180 ticks of downside. So that gives you sort of into the belly of this sort of old sort of support band between April and early May. Which you can see here was the old breakout 12.375, 12.4860. So you can see a correction back into that band of support there quite easily. It wouldn't necessarily be the worst thing in the world. Unwinding correction helped to renew upside potential, but the near term near-term sort of implications of this sort of move has sort of turned negative on these momentum, so certainly still under pressure today. Little rallies are a chance to sell, I think, near-term. I think we are going to see a corrective move. You see these momentum indicators on the hourly now more corrective, and likely to be that rallies are seen as that chance to sell. So equities still under pressure, and the DAX reflective of that. So with that in mind, I wish you good luck in your trading today, and I will speak. Thank you.